right, I'm here this morning with Larry Cohen at the NIC conference. He's the president and CEO of Capital Senior Living, New York Stock Exchange company. Larry, just 6 months ago, things were looking a little scary out there. Stock prices hit a low in March. The housing market was dead. Consumer and business confidence were at record lows. Everyone was focusing on seniors housing occupancy levels. We seem to have turned a corner on that front as an industry. What's been the biggest factor that you have seen with your customers, both when things slowed down and as things started picking up this summer? Can you describe what was happening?
Steve, I think not only our customer, I think the whole nation had this fear instilled upon them in the fourth quarter of 2008. Our financial markets were catastrophic. News reports coming out about failures of major financial institutions had an impact on the psychology of our consumers, their adult children, and most of our nation. Fortunately, what we have seen since May has been a confidence that has really instilled back, I think, in the consumer as confidence levels have improved. The housing market has stabilized over the summer, and we have been tracking very much with a lot of the data that's coming out regarding consumer confidence in housing, as we've seen a steady improvement in our occupancies that began towards the end of May.
Have you seen any difference in demand between your assisted living product and your independent living product?
It's a very interesting question, Steve. About 5 years ago, we began a program where we started to rent offices to local health care agencies in our independent living communities. Therefore, the profile of our independent living resident is a little frailer than you may see in a pure independent living setting. Because of that, we really have seen very steady move-ins as well as attrition levels of both our independent and our assisted living throughout this year. However, we did have seen a more steady occupancy level week after week, month after month in assisted living versus independent living because of the need-driven nature of assisted living.
And you've been converting over the last 18 months or so, you've been converting independent living units, not all, but in some of your communities, over into assisted living. How has that worked for you from a cash flow and occupancy basis? And are you going to do that with more of your communities in the future?
We have always had a philosophy of providing a continuum of care to our residents. And you're correct, about a year and a half ago, we identified around 6 or 7 communities that we could add more levels of care by either expanding or adding assisted living or dementia care to residents within our communities. That has been very successful. What we have seen is we have broadened the depth of our markets. We have seen more transfers of our residents from independent living to assisted living. And it is also very profitable because we're able to generate about a 60% margin on incremental revenue of those units, since much of the infrastructure of our staffing and operations are already set in those communities, and then we are able to get higher rents with more levels of care and higher margins. So it has been very successful for us. Unfortunately, many of our independent living buildings are in states where building codes don't permit them to be converted to assisted living. However, we do have communities where there are parcels where we can expand those communities to add more levels of care, adding more units. But I think in this environment, as far as the economic situation, we will delay the expansion until we can get more confidence in the stability of our economy.
And after you have a couple last new community developments that you're finishing up, and then you'll be out of the development business. Do you see yourself getting back in at some point, or any kind of time frame if you do?
Well, we're actually out of the development business right now. We opened our last 2 newly built communities this past August, and have actually been very pleased with the success and the lease-up. In fact, we have a building in Toledo that opened just a few months ago. We have 13 move-ins this month, so it's been very well received. But we've dismantled our development team based on acquisition opportunities where we can purchase today at prices below replacement cost, and with Fannie Mae and Freddie Mac providing financing that's attractive. We believe that over the next couple of years at least, our focus will be more on acquisitions and organic growth, and probably won't consider development again till another 3 to 4 years. What's interesting about this industry is not only have we dismantled our development teams, most companies have, And I think that's actually very positive for the industry because it's unlikely within the next 3 to 5 years to see much new supply coming online. And obviously, we're seeing demand pick up, occupancy pick up, the demographics are in our favor. And I think that the outlook over the near term is very positive for senior housing because of the likelihood that supply will continue to be constrained.
And as occupancy increases, and with no new supply coming on, where you have land, would you add, would you build new units where there's land available?
In that type of scenario, we would look to expand and add those units. We actually had a number of sites that we were working on that we had either adjacent to our communities or parcels that we owned, and we decided again at the end of the fourth quarter, 2008, to suspend those initiatives. But as you point out, occupancies improved. There's not much supply coming online that we see the demand, then we will go back and look to expand those, add more units for higher levels of care to provide the continuum to our residents.
How about Alzheimer's care? I mean, that's probably Alzheimer's units and facilities have probably performed the best of all categories in the last 12, 18 months. Do you see yourself converting? I know you have some regulatory issues in certain states, but do you see converting some units to Alzheimer's and memory care to take advantage of that, or is that just too different of a business for you?
No, actually, we have 10 communities today that have memory care units in it. What's interesting is we still have about 2/3 of our operations are in independent living. But what people don't realize is that since 2000, every development and every acquisition we've made has been either independent living with assisted living or assisted living with Alzheimer's care. So we're very comfortable with Alzheimer's care. As I said, we have it in about 10 of our buildings today. And some of the expansions or conversions that we're working on contemplate having memory care units in those communities.
So obviously a market you're going to go after.
Yes.
And your balance sheet is in very good shape. You basically refinanced pretty much all of your debt. You've got no debt maturity issues facing you, which in this market is very good. How does the acquisition market look for you? With that balance sheet in good shape, is 2010, do you think you're going to see some opportunities?
We're optimistic that we will see opportunities, and thank you for your comments. We were fortunate, and hindsight always looks a little better, but beginning in 2005, we recognized the ability to reduce our debt, convert all our variable rate debt to fixed rate, and extend maturities out really to 2015 and beyond. As a result, we are fortunate that we have a strong balance sheet. We also have very strong institutional relationships with joint venture partners and REITs that we also can team up with for acquisitions. And we believe that there will continue to be opportunities, and I think the opportunities will be more plentiful in 2010, where we can acquire communities from challenged operators or operators with or owners with challenged balance sheets, with maturities that we may have been able to extend. And we are optimistic that 2010 will be a good year for acquisition.
Well, you know me, I'm always glad to hear that. Well, thanks for spending time with me today, and have fun for the rest of the conference.
Steve, thank you very much.
Thank you.